Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today is the 6th of November 2018, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a look at a few instruments I believe are quite interesting right now. So, yep, but as always, before we start looking at the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then let's jump into the charts. Now guys, the first one I want to touch on is the FTSE 100. Now the FTSE here has a very interesting spot. Certainly it's retracing. You can see that it's moving lower now. This level here, we had this level as a quite important one that we were keeping an eye on. As you can see, it kind of the price has stalled around that area, but today we're seeing the price pushing lower here. The bears are taking control of this. It seems like that. Certainly the day is not finished yet, but nevertheless, for now, looking at this picture, we could see maybe a bit of weakness kicking in a little bit more, and where we could then move towards the next potential area of support at around 69.85 zone, approximately there. Now let me just jump into a 4-hour chart on this one just to kind of see how everything looks. And basically this is the level that we're keeping an eye on, is the 69.85, marked by the low that we saw here on the 30th of October. So in a way, if we do get a nice break below this, this could potentially lead towards a decline and a test of this low around here, around the 68.50 zone. So marked by the lows of the 26th of October. So in a way, for now, guys, be very cautious. Certainly, even though we are declining a little bit, I mean, we could see maybe a strong reversal back to the upside again. But again, that's just an idea here for now. What we're going to keep an eye on is, like I said, this low here, this low of the 30th of October, and approximately around the 69.85. For us, let's say now let's start examining higher levels. Again, we're still going to keep an eye on this 71.10 area, certainly, but for a better confirmation here, for a possible move higher, we would need to see this one now traveling above the highs that we saw around the 2nd of November, and that was last Friday basically. So and that was approximately around the 71.90 zone. So certainly it is a very tricky one right now. Nevertheless, it's also at the same time very interesting from just an idea, just a kind of idea to throw out something out there for you guys. You can, in a way as well, from the very short-term perspective, you could in a way look at this little area around here, and that's approximately around the 70.85, something like that. So in a way, this level here acted as quite an interesting area of both support and resistance here. So support acted, very good area of support acted on the 1st of November, and on the 29th of October it acted as a very good area for resistance. So in a way, if this could push back above this level, now this, of course, we could at this point here, we could turn somewhat like cautiously bullish, and we could then aim for the 71.90. But for those who are more on the conservative side, you could, like I said, wait until this index would get towards the 71.90. And of course, if it does that, if it gets to that point, then we're going to start looking at higher levels again. The only problem here with the higher levels is this. Let me just jump into daily here. This line here, this long-term upside support line taken from the lows of the 11th of February. So in a way, this could hold or limit the upside. Let's put it that way. It could limit the upside here. But if, let's say, this continues pushing higher and we get a break above the 73.15. Now this could be a game changer here, and we could see maybe the index traveling higher again towards the levels that were last seen in the beginning of October and the end of September as well. So but certainly, of course, for that we would need to see a good reversal here back to the upside, and of course a break above the 73.15. but that's what's in regards to the long run perspective. But from the short term perspective, like I said, I just kind of mentioned keep an eye on these levels, keep an eye on this 70.85 zone on the upside, and of course on the downside keep your eyes on the 69.85. so be very careful with this one, and let's wait for a more clear signal on what it wants to do further. Jumping into S&P 500, looking at this daily chart here, as you can see, yesterday, even though the day kind of finished within the positive zone, still kind of it wasn't able to break above this level here that I've got highlighted, and that's approximately around the 27.53 zone. Now this kind of becomes quite an important one to watch, because also it coincides here with the 200 EMA. Shown here is the black line, so 200 EMA on the daily chart coincides with that one. So basically, in a way, if we're going to get a nice pop here through this level through this 27.53 zone, this could potentially become interesting for the bulls again, and we could see them lifting the index back towards the psychological 2800, or even slightly above that, the 2817 marked by the high of the 17th of October. So for now, guys, keep your eyes on this level here on the upside. On the downside, for me, let me just quickly jump into a 4-hour chart here. This level here continues to hold the 2711 area, so a nice good break below that could potentially open the path towards slightly lower levels. And the one that we're going to keep on watching here as well, just slightly below the 2711, is the 2692 area, which acted as a very good area of support here on the 28th of June. So in a way, this is what we could be watching at, looking at, of course. But again, for those who are more on the cautious side, you could in a way wait until this drops below here, below the 2692, because also it would drop here below the 21 EMA that we've got here on the 4-hour chart, and also below this the middle of the Bollinger Band here, the 20 SMA. So in a way, some good confirmations here for a possible decline, further decline here to the downside, where we then will aim for the 2637. As you can see, it acted as quite a good area of support here. Of course, the 2637 is not the exact number here, it will be the region here around this. But if that doesn't hold, well, we could in a way position ourselves for further declines here, potentially towards the 25.95, which was marked by the low of the 3rd of May. So for now, kind of rewording everything what I just said, in a way, from the long story short, we're going to keep an eye on the 27.53 zone, because looking at this daily chart, it's like I said, it coincides here with this 200 EMA, and this in a way could become quite a nice gateway to the upside. If of course it gets broken, we could see this one traveling a little bit higher here, where our first good levels of resistance that we're going to keep an eye on are going to be the 2800 or the 2817. On the downside, again, I'll repeat myself, the 2711, or for those who are more on the cautious side, again, you could keep an eye on the 2692. Jumping into a few pairs now, the GBPUSD. Now this is what I wanted to quickly show you guys. Now I was covering this one yesterday, and this is what I was talking about. Basically, I was talking about this this upside, this kind of short-term upside support line that has been running here from the August lows. And as you can see, today we had a nice push here to the upside, tested perfectly that line, which also actually this area coincided here with the 100 EMA here on the shown as the green line. As you can see now, the bulls kind of pulled back a little bit, so it seems that the bears are kind of fighting back and trying to keep it below this line. So if that happens, and as you can see by my arrow that I had drawn here yesterday, so this was a scenario that I was looking at. So in a way, we could see this move higher, which we already got. But now if it continues to hold, if this upside support line continues to kind of hold it and the pair is gonna continue testing it only from underneath. I mean, the bears could see this a perfect opportunity maybe to jump in here and drag this one lower. Looking at this 4-hour chart on this pair, as you can see, this is what's happening right now. So in a way, what you can kind of position, how you can position yourselves here potentially, of course, is if we're going to get a nice pop here through this upside support line back above it, we're going to get back above it, and then keep your eyes on the 130 zone. Now this was marked here by the high that we saw around the 18th of October. A nice good break above this could potentially confirm further acceleration, further possible acceleration here in the rate, where we could then aim for the 132.45. Let me just quickly put a few arrows here. So just this one basically, certainly on its way, it could meet the 131.80 approximately there. As you can see, it acted as a very good area of support and resistance in here in the mid-October. So we could, yeah, like I said, on this travel higher, we could meet this 31.80. But like I said, the kind of a better, stronger potential area of resistance could be around the 132.45. So, but again, for for such a scenario, we need to see this nice good break here above the 131.30 zone approximately there. So keep your eyes on that one, and let's see how this continues today. Let's put it that way. On the downside, from the very short-term perspective, you could in a way start looking at this little level here at around 130.35. But to be honest, I mean, for us to get more comfortable with the downside, what we're going to keep an eye on here is the 129.50 zone. Now certainly I do understand it's quite a bit of a bit far from where it is right now, where the pair is right now, but to be honest, it's like I said, I've repeated this several times, better to be safe than sorry. So keep your eyes on this one. This could potentially confirm a break here, could confirm a possible decline here further, where we could then aim for the 129.20 on its way, of course, but a slightly better area of support could be seen. This one, the 128.50. So the 128.50 acted as also a very good area of resistance. So now this time it could act as a very good area of support, and it acted as a resistance here on the 29th of October, so quite recently basically. So yep guys, for now certainly keep your eyes on this. This is the area where it could should probably reiterate that this is a bit of a tricky area. If this, like I said, if this continues to push higher, that's wonderful. We need to see a nice good break here above the 131.30. And then, of course, if that, like I said, this could be seen as a nice gate opening for higher levels. And on the downside, this is where we're going to keep an eye on the 129.50 to be kind of more on the safe side. This is where we're going to start looking at lower levels if we get a nice break here below. Looking at another pair quickly, and that's NZDJPY. And for this one, let me just jump into a daily here quickly. And as you can see, this is where the pair is stuck right now. So it's stuck here just slightly below this 200 EMA. So it seems that it cannot really overcome it for now. Of course, let's see how that develops further. But given that the daily candle is not finished yet, so let's see where it finishes today. If we're going to get a nice close above this 200 EMA, then that's wonderful. We could see further acceleration here towards the 76.30, which was marked here by the highs of the 1st of August, and of course going further higher. If that doesn't hold, another good potential area to watch here is the 76.85. But of course, let's not get ahead of ourselves too much. First, let's see what it wants to do with this 200 EMA. Certainly from at this point, it looks quite bullish, because it's also now above this key area of resistance at around 75.50. Now let me just kind of quickly highlight that for future reference. As you can see, it acted as a very nice area of resistance here in the past. So now we're above that, but like I said, let's see how this daily candle is going to close, and if we're actually going to close above it, and if we're actually going to close above this 200 EMA as well. But if we get all these closes here, then yep, that's wonderful for the bulls good news for the bulls, and we can see this one traveling further higher. On the downside, let me just jump into a 4-hour here. This is where we're going to keep an eye on. We're going to keep an eye on the 75.0705 area, something like that, basically, or in a way, if you want to be even more careful here, just keep monitoring the 75 zone. A nice good break below that could potentially open the path back down here towards levels that we saw in the end of October. And so, yep, some good potential areas of support. So if a nice good break below the 75 area could open the path towards this little area here. Let me just quickly put that on the chart, and this is the one that I'm talking about. Now this area here, the 74.35 area, approximately there, acted as also a very nice area of resistance here in the past, and but now it could play out as a nice area of support. So keep your eyes on that one. But again, I'll repeat myself, for such a move, for us to see lower levels, we need to see a good break drop below the 75 zone. And the last pair I wanted to quickly touch on, and that's EURAUD. Now this one is an interesting one, to be honest. I'm not gonna I'm going to keep it here and on the 4-hour, and as you can see, we're kind of slightly consolidating here. But what's interesting here is that we're starting to form a range, but in a way, it's also, if this pair, let's say, moves back above this 158.55 area, approximately there, this could potentially confirm a double bottom formation here on this 4-hour chart. We could then maybe target these higher levels like the 159.50, or even all the way here towards the 160.35, which also act as a very good area of support here and resistance. So but for these higher levels, we need to see this nice good break above the let me just quickly highlight that for future reference. Yeah, there we go, and above this 158.55 zone, and only then we're going to consider, like I said, higher levels. On the downside, for us to get more comfortable with lower levels, we need to see a nice good drop below the 157.35. This way we could then potentially target the levels like this area here at around oops, sorry, that's too close. This one, right, this little support area, potential area, which is around the 156.40, marked by the lows of the 21st of August. So in a way, this could be a nice potential area to watch, the 156.40. But for that one to see, we need to get a nice good break here below the 157.35 first. So in a way, long story short, keep your eyes on this little range. Let's see how that performs, and let's see which way this pair is going to break. So yep, even though still the move, kind of the trend is still to the downside, but to be honest, it seems that it's losing that momentum here to the downside, and now we could see maybe a reversal, just maybe at least for a little bit here to the upside, where the pair could go and test this little line here. Let me just quickly put that on the chart. This little downside resistance line taken from the peak of the 11th of October. So something like this could be possible, certainly not guaranteed, but nevertheless could be a good idea. Okay guys, thank you very much for watching and listening, and I hope you found it useful. And if you want to join me tomorrow morning at my Traders Espresso, and that's 6 o'clock GMT time, 7 o'clock British Summer Time, and I do apologize for running a little bit over my time, but nevertheless, thank you for staying with me, and I hope you have a nice day. Bye bye.